Yo, and hello, everybody. Mike here, and that's Ty. That's Ty over there. Bench Clear Media. How are y'all doing? How are you doing, Ty?
Good. Thanks for
Good.
letting me sit in on this great conversation we're gonna have today. You told me to be the color guy, so that
You're
means
the
I have
color
to add
guy.
color.
I'm play-by-play. Your color, and then we're gonna have our special guest. And this is gonna be cool because last year we did this. We actually did 2 episodes. It was so popular, and a lot's changed in 2021. Mainly with the card market and tax law and all that kind of stuff. This is a huge thing that people need to consider in the sports card world. And unfortunately, it's been like our most popular videos. Both of those episodes are still being watched by people even now. And I thought it would be a good idea for us to come on and update what's new for 2021. Was there anything we missed last year? I doubt it. Frank's very thorough, but what things should people be thinking about? We've got 6 weeks till the end of the year, and so we're gonna kind of talk through that. Are you excited?
I am excited. There's a lot of things I know I need to do heading into the end of the year, that I think Frank will coach us through today. So I'll be asking questions out of genuine curiosity. Hey, before we jump into this, Mike, quick word from our sponsor, Card Hedge.
Having trouble managing your valuable collection and finding price transparency in the sports card market? Me too. That's why I use Card Hedge. Card Hedge is a brilliant price analysis and collection management tool. Track all your grades across PSA, CSG, HGA, SGC, BGC, and as well as your raw cards. Card Hedge pulls their research from sites like eBay, StarStock, MySlabs, and Golden Auctions. You want an accurate picture of the sports card market? Yeah, me too. With over tens of thousands of cards in their system, Card Hedge is the definitive sports card price guide. Quickly search by card, player, or set. Sort by price or percentage change. It has a lot of awesome advanced features. So what are you waiting for? Join today for only $14.99.
Beautiful.
$14.99. Is that an expense that you get to write off? Let's ask Frank. Let's bring Frank on and ask him that right now.
Hi, Frank.
The answer is yes. How are you guys?
100%. Outstanding.
Ty's big. We're little.
That's fine. So thank you very much for having me on. I have a favorite.
Who knows what's happening right now?
What's that?
Lots happening in the background. You just keep talking, having a good old time.
I will do that. I'm going to ask all your viewers. It's funny, even literally till today, I still get emails about the video we shot. Not last year, Mike, but in January.
Okay.
Asking questions. And I think I've answered every single one. Hopefully some people made some money. So before we start this video, I'm going to ask that you please go to my channel, like and subscribe. And the second thing I'm going to do is put on my CPA glasses here and remind everyone that the opinions today are that of my personal self and have nothing to do with either the IRS or my firm. So how you guys doing?
Can I ask you an honest question, Frank?
Of course.
How much money did you make from that video from us? How many new clients did you actually get?
My new clients? Now, do you consider clients paying clients? Or I'll tell you, I can't go into details for honest and confidentiality. I had people reach out to me from 4 different continents. I think I told you this. Multiple countries. I don't know if you guys even realize the breadth of that video and how far-reaching it actually went. I mean, to me, it went viral. I don't know. I probably didn't go viral, but in my thing, I mean, it's amazing how I still get emails back. Got to get a couple of clients. Thank you very much. Most of them even paid, which was even really nice.
And you got probably a few people checking out your channel, which is amazing. I echo. Go check out Baseball Hall of Fame collector, who was on Golden Age of Cardboard just last week, actually. I think we did
we shot it last Monday.
We did. So tonight's a different topic, though. We're not going to, because the sports card market continues to be a business for many, many, many people out there. And even if it's not a business, is it a bit, what's the definition? I think this is kind of a fundamental question that everybody needs to ask is, am I running this as a business, or is it an ancillary income to me? And what's the difference and why does it matter, Frank?
I mean, I don't want to rehash too much on the video we shot before, but I mean, it's very important to realize, and your viewers realize, that if you are mostly dependent or even somewhat semi-dependent on, I don't want to call it a hobby because it's not a hobby, like you said, it's a business, but on the income you're generating from sports cards, sports investments, autographs, anything like that, Pokemon cards, it's probably a business. Now, if you really want to get technical, the IRS has a set definition of 9 criteria you have to meet. But if it looks like a business and smells like a business, it pretty much is a business.
So with a business, you have income and expenses.
Correct.
That you have to account for, cost basis on cards or cost of inventory, whatever term you want to use for that. All of those things are important for people to track. How do you recommend that people track that kind of stuff?
Mike, I knew you were going to ask me that question. You know how I knew you were going to ask me that question? I took my daughter's whiteboard and I wrote cost of goods sold, which is the term you're looking for.
There you go.
Give a refresher to everyone watching that is your beginning inventory, your purchases, less your ending inventory. And that is going to be probably your biggest expense for the year. Tracking inventory, I've talked to a lot of people about this. There's different ways you can go about it, but I would tell people is, especially someone like Ty, who just had that huge card purchase, do not waste your time, and it is a waste, going through every single $10 card. I would say maybe 70 to 80% of most of your inventory should be calculated in Excel and listed out. Anything that you're going to sell for a material amount. And material is a very gray word. It could be $100 to someone. It could be $1,000 to somebody else. That's what each unique individual has to figure out, what is material to them. And then based on that, it's those material items that you really want to account for and know what your cost basis is, plus how much additional basis you're pouring into that. For example, like PSA fees and stuff like that. In order to track then when you sell those cards, what the ultimate net gain loss is on those cards.
And it's done.
I would use Excel. Don't make it hard on yourself. There's all these fancy inventory programs you can use. I mean, there's a saying in our industry, which is KISS, which means keep it simple, stupid. So I recommend just to keep it simple. Excel works just as fine, and it's pretty much free these days.
I think every industry uses that. We also use can't fix stupid. We say that a lot in my industry.
But I don't know a synonym for that, but yeah, exactly.
We just say
I just use you are stupid. I just say you are stupid. So, I'm curious then. So when you're coaching people, especially a guy like me who's got a lot of purchases and stuff, and I start thinking of all the things I didn't do well last year. Everything like receipts, people buying stuff from Target, Walmart, the supplies, the shipping costs, all those things they should be thinking about documenting now, right? Like log those things down because it's a lot harder to go back and get them.
What's important about this video today we're shooting this on November 15th. You still have time before December 31st, like you said, the next 6 weeks to make some adjustments. I think the whole purpose of this video, number one, is this is geared mainly toward those people that wrote me or people that are watching and are going to be filing Schedule C this year, treating this as the business. If you're treating this as a hobby, that's your first mistake. Worst case, you should be treating this as an investment, in my opinion, and taking it to the Schedule D. But again, going back to Schedule C, assuming that you're doing it that way, you should have a good idea by now if you're going to be making money or losing money come December 31st, because theoretically, you really can't go back in time once that day happens and try. You have a choice. Assuming you're making money, you have a choice. You could pay some of that gains to the government, or you can reinvest it back in your company. And I can't speak for other people, but I'd rather give my money back to myself than give it to the government.
That's probably most people. I think that another surprise for people, all the things that Ty talked about in terms of just thinking about different things that could be written off as expenses to offset gains. eBay has changed their policy. I think it's this year where now they're going to be sending 1099s to everyone over what threshold? Do you remember?
600. I think it's 600. Theoretically, when they passed the Tax Jobs Act last year, or the CARES Act, the big idea of the government was to get some of this money back. They were going to reduce that $20,000 threshold for getting a 1099 and adding 200 transactions all the way down to $600. So basically, almost anyone that sells anything on eBay or goes through PayPal or Venmo as a merchant, key thing is a merchant, starting next year is going to get a 1099. Theoretically, they don't have to do it for 2021 still. They may, I don't know. Some states like Illinois and Virginia still have a $600 threshold, but they are required to starting next year. So you're going to see a lot more cash transactions start to happen next year. And I get a lot of people wrote me and they're telling me that I guess like Venmo and PayPal, and Mike and Ty, you may know this better than I do. They're starting to throw people off their servers because they're doing so many friends and family transactions, and they're not stupid. They have computers to figure this out.
Yeah. Yeah. It's it can be an issue. You can get flagged for sure. You can get suspended. You can get thrown off the platform for too much of that.
Correct. And I don't know what the magic number is. So I always just say, be careful. And I personally, I would never pay any non-friend or family, friends and family, because you have no insurance or repercussions if something does go wrong. I'd rather, a lot of times when I buy stuff and they give me a net number, I'll pay the 3% myself and eat it as an insurance cost. And plus, again, that cost still goes into your basis that we talked about earlier. But we're sort of getting off subject to taxes.
No, it's good. Let's just eliminate something for all the kind of people that would consider themselves non-business sports card business people. Let's say myself, I sold one. I haven't, but let's say if I'd sold a card on eBay for $1,000, let's say this year, I'm going to get a 1099.
Yep.
It's the only thing I did. Do I really need to sweat stuff? Obviously, I'm going to have this 1099 that's going to be, I don't think people understand that 1099 goes to the government and to you.
Correct.
So they're going to know, like, oh, I'm just not going to put it on my taxes. No big deal.
No, correct. I mean, any form like that, any 1099, any W-2, you have to report. And again, we talked a lot about it in the previous video, what to do in that example. And that example itself, I would say you would need a minimum, again, I'm spitballing here, about 100 transactions, I would say, to qualify as a business. Now, each thing is different, but if you just had one transaction or even 10 transactions for the year, that most likely will fall onto your Schedule D. And if you want to know how to account for that, again, I'm going to push you back. Maybe you want to relink that January video back to the in this comment section so we don't have to rehash that.
And nothing's changed with that. I mean, capital, I would pay it. Let's say I did that and I paid $500 for the card. I have a $500 capital gain.
Exactly.
That's what you're talking about.
Yeah, you're talking about a lot of change. Really, there haven't been many changes at all, which is a good thing. There was even talk, I know, about the IRS. I'm sorry, banks having to send transactions to the IRS of more than $600. A lot of people flipped out. That's not going to happen. But again, the biggest change is not in 2020. It's 2021. It's the 20,000 that's coming up. So if you did a lot of business, but not a lot of dollar quantity wise, like you're not up to 20, let's say you did 10,000, 15,000, and you have that one more big sale you want to get in. You may want to consider getting it in this year, assuming the price of that remains flat rather than getting next year. Because right now, you can still manipulate your revenue legally. You can decide, when do I want that revenue to come in? When do I want to pay that expense? And when you pay an expense, the expense goes on your 1040 or Schedule C, not when you actually receive the item. Sorry, it's when you receive the item, not when you actually pay the expense.
Really?
If that makes any sense at all.
So if I bought a printer or a scanner to do my business, to print out
on your credit card, let's say,
and I do it December 18th, but it doesn't get here till January 4th, when do I get to write off that expense?
I would say January 4th, but January 4th, that's the day it's going to go into operation. Let's say you buy it on December 18th, and the credit card bill comes January 4th for it. Then it's for sure a December 2021 expense or an asset. So getting into this now. So let's say, I'm hoping everyone who's watching this had a great year again. They're tracking on income. And so now they're thinking to themselves, okay, what expenses can I do in order to reduce my liability to that golden zero number? Now, again, if you run a profit at the end of the year, it's not bad. That's good. You made a profit. So, but some things you can do. And Mike, you may want to speak to this. Number one thing I would recommend is contributing to an IRA. And the beauty of that is you can even do that in 2022 and count it to 2021. So I don't know if you want to elaborate on that at all, or because I know that's what you do. That's your specialty.
Yeah, I mean, you can contribute to an IRA, $6,000 if you're for an individual under 50, $7,000 if you're over 50. You have until either the time you file your taxes or April 15th to do that. No later than, even if you file an extension, you don't get, April 15th is the last day you can make a prior year IRA contribution, regardless of extensions. But if you're running a Schedule C business, you can do a SEP IRA, which is different. SEP, some people call it SEP. I call it a SEP IRA. It's a business type of IRA, which you can put more money in even. It's 25% of your income, of your net, blah, blah, blah. It's really around
up to 19,500 is.
Yes. So actually that's not, you can do more than that into a SEP.
Oh, you can?
You can do up to 56,000 into a SEP.
Wow. So the bottom line here is you can either take that money you're going to get to the government, you can invest it in the market. Now, yeah, Mike, you're going to eventually pay taxes on that, but at least you give the money the opportunity to grow.
Yeah, tax deferred growth is a very powerful tool. And that comes right off your Schedule C. I mean, Correct. It's actually on the front of your 1040, so it's a above the line item, as we like to say. It's good. You want to have a lot of above the line items.
Yes.
And that a SEP IRA is one of those. A traditional IRA where you're going to get a deduction that $6,000, $7,000. That's a little more tricky because there are income limits, and that's combined income, your regular job, your hobby job, your sports card job, spousal income. All of those things matter. So that's much more tricky. So just look that up. It's an easy Google search.
Yeah.
Income limit for an IRA deduction. It's not very high. Let me put it that way.
Other thing is, I talked to a lot of people about starting up their business this year. So what the government allows you to do is every year you start a business. Now, theoretically, it's supposed to be, you get $5,000 expense deduction for starting a business, whether it's consulting with me, consulting with Mike, consulting with anybody. You're allowed $5,000 before you commence operations as a startup expense. Now, let's say you started your business June 30th this year. The key thing is this year. And then you incurred a lot of these expenses in August. Personally, I don't think the government's going to come in and match the August to June, if that makes any sense at all. Now, if you spent the expenses in last year and you're deducting them this year, you can still do that. I'm sorry. If the expenses were in 2022 for a business started in 2021, you're getting to a gray area. I wouldn't recommend that. So that's $5,000, but you're also allowed an additional $5,000 every year for, we're going to call them organizational expenses. And those are basically just general direct expenses you put into your business. So it's a pretty lenient area as long as you can mentally and not crazily, don't get greedy, but you can pretty much pick $5,000 you spent on your business and deduct that. Whether it's for even a tax return.
That's good advice. So when you say starting a business, you mean legitimately filing the paperwork.
Legitimately. So for example, California charges, I think, close to $5,000 to start a business there. It's very expensive. Michigan's only like $200. But that cost can be directly deducted up to $5,000. Now, if you spend more than $50,000 total on startup costs, the rules get a little gray. Talk to your CPA. You can talk to me. But yeah, it gets a little gray, but just rule of thumb is $5,000 before you start the business and an additional $5,000 every year, including the same year of the startup. So going forward for just general expenses of running your business.
So year one, theoretically, you have 10,000.
Theoretically,
okay.
Yeah, theoretically, you have 10,000, especially if you start your business, let's say on December 31st, then it's a no-brainer.
I can do high-level math like 5,000 plus 5,000. I'm really good.
Yeah, but I'm not sure if Ty can. That's why I got to explain it with my fingers.
Yeah.
So that.
Keep going, man. If you got stuff you want to talk about.
I took notes. I try to come prepared. Another thing is you have a slow computer. You want to get a new computer. So theoretically, it's a fixed asset addition. You're not going to sell your computer. It's not inventory. But what the government does says is you can take 50%. If you're running a gain, and the key thing is if you're running a gain, you could take 50% of all your fixed asset costs and apply that against your gain. So let's say you're running a gain of $2,000. Theoretically, you can buy a $4,000 television, as long as you're using it for the business, or a computer, strictly for the business. Half of 4,000 is 2,000. That will offset your gain. You got a brand new TV, and now you're going to pay the government nothing.
Gain, you also mean profit as well.
Profit, correct. Profit.
Those are
yes,
synonymous terms, just so everybody
yes.
knows. Okay.
So,
Ty, do you have any questions?
No, I mean that's a good reason to know kind of where you stand heading into the year.
This is why this is all the planning you got to do now. And another thing is, when's the next Dallas Card Show, Mike?
January.
Just not one in December.
Mm-mm.
So business expenses. Let's talk about travel and food. If you are traveling for business and at like a baseball card show, as long as you're spending at least one night away from your home, and home is again a great term, you can deduct the plane ticket, the cost of admission, the mileage, the Uber. All that stuff is deductible. But again, it's got to be in this year. You can't push it to 2022. And I did a video earlier on this about the national, how you can go for free. But again, it's very similar. All these costs are deductible. And what's really nice is for this year and next year, food, which is normally only 50% deductible, is 100% deductible. Just it can't be lavish is what they're saying. And again, the trip has to have, this is the IRS wording, significant business purpose. But there's no question, if I'm filing a Schedule C and I went to a baseball card show, I mean, I'd be expensing every penny of that. Every penny. Plane ticket. I mean, people even going to go first class. I saw a video on a guy. You may have saw this video. It was on Real Sports with Brian Gumbel. He flew a private. Guy was making no money. All of a sudden, he's flying a private plane to the National from Nashville. I don't know if you saw that or not. Those are all business expenses. That's why he's doing it. He's making a killing.
All right, let me ask you this question.
Sure.
You put up your little cost of goods sold diagram there.
Very complex.
So if I had a beginning inventory of $10,000 of cards, okay, and then just because of price appreciation, my ending inventory, and I'm going to
stop you right there.
Okay.
Price appreciation, it was nowhere on your Schedule C.
So that if I bought nothing, my ending inventory is still $10,000, even though it might be worth $20,000 if I was to have to sell it.
Correct. It's cost basis. Whatever you spent is what's going to go into this number or this number or this number. Now, some people argue, and it's not really, there's ways around it. They were going to say, listen, I'm making $10,000. Let's say I'm running a net gain at December 30th of $10,000. I'm going to buy $10,000 of stock, inventory, cards, whatever. And that way I would owe the government nothing. It doesn't work that way because of the fact that you started with $10,000. If we add that $10,000 of purchases, and put it over here, we have to back out at the end of the year what we still have, which is still that $10,000. So whatever you're putting in at the last day, you have to back out, assuming you haven't sold it. I'm trying to get the light correct.
Right. So it's a net zero benefit.
Net zero.
Right. Because you
I don't want people, and I may have misspoken earlier, and I apologize for that in a previous video. You can't actually buy inventory and deduct that directly unless you sell. But again, one thing you can do is if you're sitting on inventory that you paid a lot of money for, and Ty and Mike, you would know this better than I would. You're running at a gain, and you know whatever this product is, I'm never going to recoup that money. It's like a sunk cost. Let's say you invested a lot of money. I'm going to pick two random players, Juan Gonzalez and Josh Hamilton. And you know the costs are not going to go up ever again. I know. How would I pick those? And you're running a gain. You can sell those at a loss. You know what I'm saying? Now, this is the time to recognize these losses, these sunk costs. And you can use those losses to offset your gains. And it's very similar even if you're going on the Schedule D, if you're holding stock that you know you're not going to get your money back. You sell those at a loss to offset any potential gain, because the max Schedule D loss you're allowed to have is $1,500 a person on the filing. The rest you have to carry forward indefinitely. If that makes Have they lost you guys yet?
Nope.
No. So, okay. So the question then will come up, like, for instance,
Sure.
Josh Hamilton, right? Mike's had a billion Josh Hamilton cards for 20 years.
Yeah.
He's not carrying that inventory forward every year since 2000.
Okay.
So when he sells them, right? And I have
Yes.
guys like that 5 years ago, I didn't carry that inventory. I kind of just let it go. When I sell it, it's going to show up as,
well, it's going to show. Let's say you give it away to make it easy. So you sell it for zero, but you paid $1,000 for it. You now have $1,000 loss. Zero minus 1,000. Negative 1,000.
That scenario. What about the fact that I have no idea? I didn't track long ago what I paid for all this stuff. I have no idea.
And again, this goes back to the earlier video. A lot of people don't know. A lot of people didn't realize, wow, this could be not a hobby, but a business. Right. Your best bet is to make a fair and wise guesstimate. Again, I would not, because those cards, God, I'm trying not to knock Josh. They're not worth very much now, to put it nicely, probably. So, but again, you may have paid a lot of money for them. So if you can guesstimate, find an old Beckett, like I know I bought him in 2000. Here's a Beckett from 2000. I could see what, so you do some math in your head. You don't need it to the nearest dollar. I don't recommend using whole numbers ending in 000 or anything like that. But I think you can, as long as you're reasonable and close, the IRS should be okay. Say, listen, I bought a Beckett. Again, that's a deduction because it relates to the business.
All $5.
Whatever. Hey, maybe it's Beckett issue number. Well, not number one. You probably didn't buy it in '83, but whatever it is, say it's the reduction of the cost. So every little thing counts here. You got to be. I don't want to say creative, but you got to have a good memory sometimes.
Now the eBay does, like, if you bought it on eBay, especially, you can go back as far as 2019 and see all of your purchases.
Yeah, so correct.
You can't beyond that. Do you think, I don't know this. I don't know if either of y'all will know this. Could you go request from eBay? Hey, I need to see my transaction letter from 2000.
No, I'll tell you this. I'm involved with an organization, and without getting into detail, we had to go back to see 5 years worth of records. And they said they only had 18 months they could help us with on PayPal.
Yeah. I've gone in the same path. They don't work with you.
No.
So let me ask you this, Frank, because a lot of people that enter the hobby in March or April at the peak, they're facing a situation now where they are losing money on cards.
Mm-hmm.
And you just said the max they can write off is essentially $1,500, right? So let's say they're upside down 10 grand in cards. Is it better for them in some cases to sell at a loss or to hold those into next year?
Well, the 1,500 relates to the Schedule D. If you're treating this as an investment, not a business.
Gotcha.
So if you're treating this as a business, and again, if you're running at a loss, you may say to yourself, listen, I don't think I want to do this next year. Yeah. And if that's the case, it's not a business. We talked about this before. You need to think about this. A business goes on 2 years, 3 years. Rarely will the IRS be happy with, oh, this was a hobby. I think it's a business this year, but now I want to go back to a hobby next year. They don't like that. It's a red flag to them. So, but if you really had a loss, but you think you're going to make it up next year, I don't know what the hobby is going to do with next year. So you can take that loss. You can offset it against any other gains from like your W-2, your Schedule D. It goes to the page 1. Now, if you have a net loss still at the end of the year, you can actually amend 2 or 3 years backwards in time. If you had a gain last year, for argument's sakes, you could amend that return, take that loss, offset it against that gain. So you can go back 1 year, 2 years, or you can carry that whole loss forward up to 20 years.
Yeah, I guess my point is for those that have been caught kind of upside down in cards and they're thinking, gosh darn it, maybe they do want to get out of that hobby, and that's a different discussion.
Yeah.
But it's not all for naught, right? You can still use those losses to your advantage on the rest of your personal taxes.
Right. You don't lose the loss. Oh, I'm at a loss. I'm at zero. Shoot. Yeah. No, you will have. Well, hopefully you're running a gain next year and you can just use those losses to offset the gains. Now, the tax rates don't plan on any, there's no changes coming from this year or next year. I can't speak the year after that. No one really knows that right now. But again, you can look at the taxes 2 years ago, maybe, and maybe it'll benefit you to carry those losses backwards. You have to file an amended 1040. And that's, again, you want to sit down with the CPA. They can run the numbers and say, listen, you're better off either carrying it forward or actually, recognizing those losses in a prior year.
Got it. Got it. Let me train of thought here. So let me ask you about cash deals. We talked about the national. A lot of people, I bought some collections recently for cash.
Yeah.
And for two reasons. One, because that's the way the guy wanted to do it, right? And they wanted to keep it off the record. What's the best way to account for that with no record?
As soon as you get that, make a note to yourself. I've even memorialized things by sending an email to myself. And the email will memorialize the date saying, I just spent, and again, just note the good cards or something like that, but something kind of memo say, I spent X amount of dollars. So you'll know what kind of basis to put into those cards you bought. Now, again, I don't know how much you spent for that $1.5 billion. See, I watch your channel. A lot, but I would not be allocating the basis to every single card. You'll be doing that for months, if not years.
Would you allocate the basis based on current prices?
Yes, 100%.
Okay.
Well, current as the day he bought it. Yes.
Like you might buy 10,000 commons and a Mantle rookie.
Yes.
You're going to go.
For me, I put it 100% basis to the Mantle rookie.
Right.
Because the commons have zero basis. You're going to sell them for what? $1 minimal. Assuming you, and again, we're assuming you're reporting everything to the IRS, which, to be honest, we know is not going to happen.
There's your friend Norman. He wants to hear about taxes.
I don't blame him. It is very interesting. So we talked about travel. I know Ty shot a video never to do this, and I agree with him. But if for some reason you took out a small business loan, you put cards on your credit card, you bought cards with a credit card, any interest you paid on the credit card, on the loan, all deductible. Again, I don't recommend doing that at all. But if you did do it, you can deduct that interest.
I'm impressed you watched the video.
Of course, I watch all your videos.
Wow.
I'm talking to Mike, not you.
I was just going to say you're becoming a fan of mine now. This is really nice.
I told Mike you guys have me sign me to an exclusive agreement. So a couple other things to do. And this is if you had a banner year, you could form an S corporation. And I'm not going to get too much in the weeds about this. But basically, with forming and again, this is if you made more than $200,000, you went through everything, you did all your taxes. And again, some people did this. I guarantee you, I've talked to people. They have banner years in 2021. So you can form an S corporation. And basically what that does, it takes the profit. And instead of taking it out of the company, which says what you're doing with Schedule C, you're leaving it in the company and you're paying yourself a fixed salary every year. So that's just an option if you had a really good year. Talk to your CPA. I'm not going to get you in the weeds with that, but that's a good way to avoid taxes.
That's interesting.
I don't want to say avoid, defer taxes.
You don't want to get in the weeds, but a question about that would, when you do switch over, you can go back in time and say, hey, everything from the before this, I can still account for. There's no from this point forward, I made the switch.
Correct, to an S corporation. Correct. Whatever you withdrew from your company through the day of the switch is basically a salary you pay to yourself, taxed at a 15.3%.
Gotcha.
You make the switch. You could pay yourself a salary. You probably should pay yourself a reasonable salary, although you don't have to. Do you ever watch Cheers?
Sure.
Yeah.
There was a great episode with Robin Colcord where Sam bets Robin a year of his salary on a bet, and Sam wins, and then he gets $1 because he doesn't pay himself a salary. He makes all this money, and he does that because he's an S corp. I'm getting in the weeds again. Bottom line is, there's ways to defer taxes if you're making a lot of money. It's by switching from a C to an S. Don't even try and do this on your own. Talk to your CPA.
I love it.
Okay. What else? A couple other things. And so again, I talk to people. We talk about selling loss leaders. I talked to one breaker. I won't mention his name. He's having a good year. He goes, you know what I want to do? I want to print T-shirts and send them out to my clients and everyone that breaks with me. And I go, so I said, get that now. Spend the money now. Get the T-shirts. And it's just a regular expense. It's advertising. So that's another idea if you want to do that. I talked to one person. We talked to them. And he started paying his kids a salary. Now, you're thinking, why would you pay your kids a salary? The reason is their tax rate's a heck of a lot lower than your tax rate.
Good point. If they're helping you sort cards, like Ty has his kids.
How old do they have to be? What's the cutoff?
There's no limit to kids making money. It's called a kiddie tax.
What?
Yes. You never heard of a kiddie tax? Yeah.
No, I think you just made that up.
No, I did not. You can Google it.
He did not make that up.
Okay.
Right. I'm going to switch gears on you, Frank, a little bit and ask you another question.
About autographs?
No. As awesome as that would be. If you're a content creator and you make money, I'm going to get a 1099 from Google.
Yep.
For my YouTube stuff. There are people out there that monetize their channel and they make, however much they make or whatever. What expenses can I use as a content creator? If I buy a new mic or a new whatever, all those are expenses because that's basically a different Schedule C for me.
Correct.
The way that I run it.
There's an argument that the mic, again, it comes down to materiality, whether or not that's a fixed asset or an expense. I would say a microphone for sure, day-to-day is an expense. Let's say you bought a new computer just to make content or a new camera. That's probably closer to a fixed asset. But again, I watched your Vegas video, man on the street. To me, that's directly related to providing content for your channel. Plane expense, meals, Uber, mileage to and from the airport, parking. Did you pay your wife if she drove you a reasonable expense?
No, but she did drive me. Good point. No,
you can pay your wife or you can pay the government. I don't know who you trust more. That's not my business.
Ty, make sure you're making good notes for us for Bench Clear so we can get all this on the massive millions of dollars that we're making on YouTube.
But again, here's the thing though. Remember, if you run at a loss, you can carry that forward 20 years. So you can use that loss now to offset the millions you're going to make a couple of years from now. And you sell the channel. To Fanatics, like everything else.
To Fanatics.
Gosh, I love you, Frank.
All right, what else, Frank?
Listen, we talked about the losses. You go back 2 or 3 years, 20 CPA memberships. Again, I don't know your PSA. Isn't that a membership fee? That could be.
Used to be.
I mean, pretty much any dollar that revolves around your hobby is probably deductible. We talk about the home office expense. I can make an argument, Mike, that the portion of your rent. I don't know if you have a mortgage payment still. I don't know. But assuming you have a mortgage payment, let's say a quarter of your house, and I've been to your house. I know this is not true, but a quarter of your house is in that room right there. And that's all you use your room for is content creation, let's say. A quarter of your mortgage payment could go towards the home office expense. And that is like very common, especially last year. My wife doesn't create content, but she worked from home full time all year. And so we redesigned our den. We never use it besides when she's working. Definitely a home office expense. 100%.
Gotcha.
Hats you're making. You know what I'm saying? You want to make hats. You want to make T-shirts. I mean, we talked about all this. The advertising, if you're using advertising. There you go. Definite expense. Got that,
Expect
one of those when we're done here, but definite expense.
The Bench Clear trucker hat, right there.
Yes.
Limited edition.
With the sticker on it. Look at you. You're so hip.
I leave this. It's a snapback. I leave the.
So I guess the key takeaway is I don't know how much. Again, the other thing I want to talk about is you can manipulate your revenue and expenses. Like you can know it's like, listen, I'm running close to zero or a little bit of a loss. I'm happy where I am. I don't know how the market's going to move between now and the end of the year between a hobby. But you can hold off selling those cards that you know you're going to make a profit on, especially let's say the baseball world, right? They may go down with the CBA, but assuming the baseball doesn't move much between now and the end of the year, you're sitting on a key rookie card. I don't know, Ohtani, refractor, gold, whatever. You may want to wait till next year to sell that and defer that revenue to next year. You can play when you want to recognize that revenue. And again, the same thing with the expenses. If, again, you're running at a loss, you don't want to take the expenses, and you have a lot of expenses coming up, just wait till January 1st to buy this stuff. And I'll say this is a great time of year for tax planning. And talk to your CPA. Again, I probably responded to close to 1,000 emails. I'm happy to do it for free as long as you keep them simple. Again, it's nothing too complex. And I'm happy to answer any questions people have.
How can people do that? Since you're obviously making that offer again for this year, what's your email?
Same thing. I'm sure you'll put it in the comments. It's frankr@schreiber.cpa.
Awesome. So, and they can go comment on your awesome videos on your channel.
Thank you. Yes, I got a new potential Hall of Fame baseball right here. I'm not going to say who it is. I'm doing a giveaway on a Hall of Famer, future Hall of Famer, hopefully next month.
Who was that? I couldn't see who that was.
Dick Allen. I have the same card.
You guys are so cute.
Thank you.
We did show a baseball card. That's awesome.
Yes, I have very few baseball cards left also.
So I'm not going to be in that giveaway because I don't need the card, but
that's fine. So I mean, I try to keep these videos short and to the point, hopefully. If it's a real complex question, again, still send it my way. Let's talk. Let's figure it out. I'm happy to help collectors keep their money rather than give it to the government.
Awesome.
Well, I can speak from experience. Your team helped me get the number much closer to 0. So I appreciate that.
Not a problem.
And, yeah, it's complex. There's a lot of things.
It's complex.
You need
again. This is the tip of the iceberg. We're talking taxes here. So, and I recommend if your business is not too complex, even though I would love the business, I would still recommend TurboTax. I don't recommend going to a CPA. But again, if you are going to go to a CPA, make sure your CPA knows the hobby in and out, because otherwise they're going to direct you to a Schedule D, and you're just giving money away. You're giving money away to the CPA. You're giving money away to the government. You really have to know and understand this hobby. So, and it's just amazing me. I always love it when women email me for questions because, wow, and you'd be surprised the ratio. So,
yeah, it's
a lot of great people in this community,
and it's definitely a unique hobby or a unique business structure.
Yeah,
that has a lot of moving parts. That if people aren't careful, they can end up kind of not doing the best thing for themselves.
Correct. I mean, the government's never going to tell you, "Oh, guess what? You paid us too much money. Take some of it back." That has never happened in the history of the IRS that I know of.
Well, we'll wrap it up here because we don't want to keep it too long. If we get enough comments and enough feedback like we did last year, we ran a second episode last year just to kind of address some of those questions. Put them down below. Send Frank an email. He's open to receiving those and answering those. So,
but again, I charge a like and I'm sorry, I charge to subscribe to my channel from now on to answer a question.
There you go. That seems
fair. One
person
refused to pay me last year. One person.
Well, that wasn't me or Ty.
Wasn't you. I don't know who it was.
That's good. Well,
wasn't me. Cool.
Thanks everybody for watching.
Thank you so much for having me.
Thanks, Frank, for being on here. Ty, you were worthless as usual. And just a pretty face. That's all Ty is.
Go back to counting your 1.5 million cards. I need an updated video.
One's coming later this week. All right.
Okay.
Thanks, guys.
I'll wait for the next On the Fly with Mike and Ty.
Yes!